When I reflect on how the corporate banking relationships have changed over the last 2 years, I'm reminded of a Chinese proverb: "May we live in interesting times." There's no question that the credit crisis has faced us with some very interesting times. But I'm very happy that we now face a situation where we can see the light at the end of the tunnel. We are, in fact, coming out of what was a very difficult period. And as a result of that, I think there has been a shift. We have a different environment. There is greater liquidity than there was, although much of that liquidity is in the form of trapped cash outside of a multinational's home market. There is certainly, at the moment at least, less market volatility. There is clearly significantly more regulation of the financial markets. And I think that a number of corporate treasurers are thinking about whether they were overly reliant on the capital markets during the uptake of the credit crisis. As a result of all of that, corporations are really thinking about where their sources of liquidity are, where their sources of capital are, and wanting to make sure that they are effectively utilizing their internal sources of liquidity and capital. And so I think the role that banks play is to help corporations with their working capital management and really optimizing the way in which they utilize those internal sources. There's no question that there is continued growth in cross-border trade, but there is simultaneously a reduction or a consolidation in the number of suppliers. That means that it is absolutely essential that banks work closely with their corporate clients to help them to optimize and maximize the way that they're working with their suppliers and with their distributors. At Deutsche Bank, we do that through very effective and very appropriately designed supply chain finance arrangements and distributor finance arrangements. So ultimately, those programs that are designed in partnership with our corporate clients enable our clients to optimize the way that they work with their suppliers and their distributors, and to ensure that they are gaining as much liquidity through those arrangements as possible. There's no question that visibility and connectivity are going to help corporations to improve and continue to optimize their liquidity management and their working capital management. And there are a couple of things that we're doing at Deutsche Bank that I think are very important, really fundamental to ensuring that we're delivering that connectivity and visibility to our clients. First, we have a global solutions group that is staffed with true experts in this field. And they are working in partnership with our clients to ensure that the structure of their banking arrangement, the way in which they maximize liquidity, the way in which they pool cash, is the best approach for that client, for that individual client. And then the way that we deliver that is essentially through a kind of Lego approach. So we look at the products not as overarching products, but as each having component pieces, like Lego pieces. And so when we're delivering something specific to meet a client's needs, we put together the Lego pieces in the way that delivers on that promise. So that very specialized approach enables us to know that we are offering our clients a solution that's right for each of them. And then the second area that I think is absolutely essential is delivering the best implementation and service. Because ultimately, it's how we interact with our clients on a day-to-day basis that differentiates what Deutsche Bank is delivering.